Events in Europe continue to dominate sentiment in financial markets. We are getting to critical moments within the process of trying to resolve the issue. A weekend summit ahead already looks like it's not going to meet a resolution. They're already speaking about a further summit in the early part of next week. But what I think is interesting is that financial markets have not sold off around this whole uncertainty. If we take a look at the FTSE 100, again, this range-bound market that we've seen, but we are holding above the 5,400 level at the moment. So I think it's a credible performance by financial markets in light of what clearly sees increasing uncertainty in Europe. I think the one chart that summarises the position in Europe quite well is this chart here. This is the spread between the yields in France and yields in Germany, and this is showing the premium that France is now under. It's a chart that's rising very significantly, and I think goes to the heart of the matter here in trying to bring this sort of resolution to the European situation. The French are incredibly concerned that the cost that is going to be imposed on them will affect their AAA rating, and I think that this is what needs to be resolved. But as I say, this chart is demonstrating that the premium on French yields at the moment is soaring, and I think if this chart continues to widen out over the course of the next week, will have an increasingly negative impact on financial markets. If we take a look at some of the features of the week, just pulling out a chart here of Home Retail, the owner of Argos, really just further evidence we've been talking about of retail businesses, some retail businesses becoming less relevant in the current environment, and Argos has seen a significant drop in profitability, a significant drop also in profit margins at the moment, and I think the impact of companies like Amazon with new technology and new ways of doing things is impacting on certain aspects of the retail market, and that's amply demonstrated here in Home Retail. Also want to just briefly comment upon the commodities market, but because all of the conversation at the moment globally relates to whether or not we're seeing reduced growth expectations. We're certainly seeing reduced growth expectations in the Western world, but we also saw numbers earlier this week in China, which was further evidence of the Chinese market slightly underperforming against expectations at the moment. And as the major consumers of commodities, we have seen just a little bit of a sell-off in the course of the last week, having sort of rebounded in early October. So a little bit of a sell-off, and you can see by the pattern of that chart that a further downward tick on there would not be unexpected in the course of the near term. The other factor which I think is increasingly impacting on the UK is inflation, and this chart here really plots how the cost of living is rising. This is compounding the inflation since 2006, and this index here, starting at around 195, is now trading at 237, and that really is amply demonstrating that the cost of living over the course of the last 5 years, at a time when people are finding more taxation and indeed lower wage growth, this is the chart that really is the sort of hidden message of how much cost of living is going up at the moment. So again, Bank of England is talking about a very sharp reduction in inflation over the course of the next few months, but as I say, at the moment, no signs that is particularly happening. The final chart here is of sterling. Sterling has bounced back against the dollar from that low level of 154, and it came on the back of those inflation numbers. Maybe some odd talk that if inflation doesn't come back, that Bank of England will be forced into taking measures to try and address the cost of living over the course of 2012.